It really seems to be about liquidity management at this point. Jens, let me bring you in. Dollar, from a flight to safety standpoint, as all this works out in the financial sphere, is that going to be the biggest winner here, despite the repricing of the Fed that's going on as well?
I think the two biggest counter currencies to the dollar is what the euro is doing and what the Chinese currency is doing, right? So in the short term here, we have to digest the news we've had around Credit Suisse, right? The surprise in terms of this takeover was that the bondholders took a loss. The specific part of the bondholder capital structure that was the most risky was wiped out entirely. And that was not really expected. And this is what we're going to see if there's a big fallout from that in coming days. What is going to happen to the same bonds on other European bank balance sheets, right? So people are going to look at Deutsche Bank, French banks, and so forth. If that gets repriced significantly and we have broader credit contagion, that's how you can see the euro trade lower. I think that's a key concern, right? So there's a lot of moving parts, and it's because of that the Fed, together with the other central banks, stepped in this evening and provided that dollar liquidity because they are worried about that there's going to be dollar shortages, and they want to get ahead of that.
Tim? Hi, Jens. I just wanted to see what your thoughts would be in terms of the ECB's reaction. I don't think we've seen an explicit statement from them.
So I thought last week, obviously, it was very interesting that despite significant turmoil in the European banking system, right, the ECB went ahead and hiked 50 basis points. We've even had over the weekend here several ECB policymakers saying that they want to hike rates further, right? So there's certainly a reluctance to sort of panic quickly and stop the tightening process. And this, I think, is sort of a very general point we can make in this cycle. In other cycles, we've had a situation where as soon as we had financial instability, that immediately put central banks on hold and very quickly put them into cutting phase. In this cycle, we have inflation way above target, not just in the US, but also in Europe and many other places, and it makes it very hard for them to certainly switch into a cutting cycle. And if you look at the US curve, not only have we now had the Fed price to pause very soon, we actually have cuts priced over the summer. We have 50 basis points of cuts priced for June and July, right? So the market is kind of thinking the Fed will be forced to act quickly, but the question is, can they with inflation this much above target?